Hello, friend. If you observe this financial world in your daily life, many people working in this industry will come and try to make everything complicated for you, saying that you should not know anything. Many people who are looking from the outside will not be interested in learning about it. Even if they are interested, they will use all sorts of complicated terms and then make us admit that they are experts and we do not know anything. But I will tell you a secret now. It is not that complicated. You do not need to explore all the asset classes. There is no need to use complicated formulas like in a spreadsheet and do Excel calculations. But if we follow the simple financial rules that we will see in this video, we can avoid major financial problems. In an example in this book, a person named Sam, whose father died and he received an inheritance, had all that money in his bank account. However, this financial industry is so complicated that he did not invest in any assets and kept it in the bank, and the value of his money decreased due to inflation. Even though he felt that when he went to these financial experts, he would be scared by all the complicated things that he would consult with any financial advisor. At the same time, he did not want to invest without knowing anything and grow his money because they presented a complex fee structure for all the services. At the same time, he was afraid of taking action without knowing what would happen if everything went wrong. That is why he did not even take the first step in his financial journey. So, when the authors of this book share a lot of experience like this, they met in a podcast interview. It shouldn't be complicated. Just like how a healthy diet, sleep, and exercise help us live a healthy life, similarly, we should not overcomplicate anything to maintain our financial life. Just keep it in a small index card. The best simple financial rules to tell people are the ones that these authors have put together a list. Today, we are going to learn about the simple financial rules that are on that list. So, let's start buying a home when you are financially ready. In general, we all want to start generating some income. Then, in India, due to many emotional reasons, we are not eligible for a home loan. So we immediately take a loan for 30 years and buy a house. If the house owner asks us about the problem of renting, we can pay EMI instead of paying rent. If we don't have our own house, we will not get married. But we will not think about living in debt for many years. We should start investing from a young age and use compounding to our advantage. We should not start compounding from the beginning, but we should go against compounding and become a super asset for the bank. For me, the liquid network is better than the illiquid network. We humans buy this kind of house and use it as our residence, so even if it gives us high returns, we don't think of selling it. Why do we think of selling it or mortgaging it in emergency situations? The processing time is very long. If you are already struggling with student loans and credit card loans, then this home loan is still a big solution. If you are not buying a house due to emotional reasons, you are thinking about buying a house. If you are asking how to know if you are financially ready, you can follow the 30-20-30 rule. Here is the explanation. If you are going to buy a house, even if you pay a down payment of 30% of the value, the loan tenure should not exceed 20 years. The EMI amount for such a loan should not exceed 30 to 33% of your monthly in-hand salary. Only then will you be financially ready to buy a house. Meaning number 2, insurance. Make sure you are financially protected. Everyone knows that insurance is not that interesting topic, but it is a very necessary topic for our life. Why is it that through this product, you can protect yourself from the financial downside that may happen to you? As a point to discuss earlier, if you have a home loan or not, if you have many members in your family who rely on your salary in your life, then a term life insurance comes, and some people say that it is a must-have product because this is the one that gives financial protection for a set period of time, i.e. for a few decades. You are the one who uses it. The cover amount will be 20 times more than your annual income. For such a large cover, you will have to pay a premium every 2 months. But they say that for this amount, you will not be able to get a house on rent, but you will get a peaceful sleep, because if you sleep and the next day you are not insured, the coverage amount will go to your family and nominee. If you are going to take this kind of term life insurance, try to take it before the age of 35. Cover it until you retire. As for this term life insurance, the premiums will increase. Now you have a 2. There are options like taking a cover of Rs 1 crore by paying Rs 1 crore to 700 per month. So for a period of 30 years, you will have paid only Rs 25 lakhs. But if you have a cover of Rs 2 crores, provided that your age is less, enter your personal details and compare how much premium you will be charged. If you want to compare. Number 3. Strive to save 10 to 20% of your income. It's true that saving money on a low salary is difficult, but the point is that it shouldn't be a reason for you not to save money. Whatever your salary is, at least 10 to 20% of your monthly income should be a habit. Money doesn't change a person. It just amplifies their personality. It changes you into an exaggerated version of who you were before, even when you have a low salary. If you have a habit of spending a lot, when you get a higher salary, your mind will already show you opportunities like spending a lot. If you have a habit of spending a lot, no matter how much money you get, you will take actions like spending it. So no matter what your income is, make it a habit to save 10 to 20%. Number 4. Pay your credit card balance in full every month. Credit cards are the easiest unsecured loan you can get. Since credit card debt has the highest interest rate, even if you buy any other type of loan, repay it in full, because you are paying more interest on this than on all other debts. So every month, your credit card bill will be charged. Show the full amount. If you are already stuck in the minimum amount due trap, apply for a personal loan from friends or relatives and pay it in full. Because the interest rate is high, your life is completely ruined in this debt trap. Number 5. Don't make complicated investments. Do you know the main reason why people don't invest? It makes simple things complicated. It is better to think hard and do market analysis, sector analysis, individual firm analysis, and try to pick a direct stock. I have earned so much money so quickly in the media so that you can become a gambler by predicting whether a stock or index will go up or down in futures and options. Instead of sitting around and watching the market, don't overcomplicate your investments. Buy simple, low-cost index funds or index funds that don't charge too much, and start a SIP in a low-cost index mutual fund or index ETF that invests regularly and automatically. If you start a SIP in a low-cost index mutual fund or index ETF, then it's a miracle that the market has crashed. That is, you are too afraid of the market. If you have been investing your money in index funds or ETFs and have a little bit of money on the side, then you can easily get the returns you need for your retirement and future goals by running a combination of SIP and LAM. If you don't want to know much about the market and want to invest simply, then this is the best strategy for you. We have explained in it how to approach this SIP plus LAM combination. In case your income is high and you have a lot of money on the side, then only then you can start direct stock investing. I have to worry about my asset allocation changing properly. If you want to grow your career at a slow pace and get a normal job, then SIP plus LAM sum strategy is the best option for you. This is the simple financial lesson that we should take from the index card book. Apart from this, there are some other points, but that is in the American context. Since there are 401k plans and all that, we have shared only what is useful in our Indian context. Maybe if you are an NRI and want to know the things in the American context, if you need it. If you like this video, like it, comment it, share it with your friends and family.